Welcome to the Stock Market Morning Prep video for Wednesday, August 20th. Markets continue to move higher. I believe it's 8 days in a row coming off the lows from 2 weeks ago. Dow Jones up 80, NASDAQ up 19, almost 20 points. S&P up almost 10 points, and Russell almost up about a little over 4 points. 0.4%, really across the board. Very, very light trading, very quiet, subdued trading. Markets gapped up and pretty much stayed that way the most of the day. And that's what we're getting now because we have the last 2 weeks of August going into September, which I personally can't wait until everyone gets back into the swing of things and everybody's back to work and on their trading desks. So we have to be selective in our trading. We have to be very cognizant of what's happening around us, that's for sure. But the markets are in buy the dip mode, and that's why when we have that real quick flush down, you need to be short your positions, swing trading, which that's not what I do, or at least not right now. I'm not looking to take any overnight risk home with me and then wake up to a nice nasty surprise. Obviously that has not happened in the last 8 trading days. We've continued to move higher. We bought the dip and the markets continue to move up. Now, we were into the sweet spot of getting short the market, but that has not materialized, giving us a trigger. So therefore, we continue to buy the dips in any good quality stocks that maybe have moved lower in the past several weeks, hasn't really fully recovered. So that's what you want to look for, stocks that are coming out of bases. The builders I like. I've been mentioning that. They were tough though. I mentioned a couple weeks back that lumber prices started moving higher. Watch the builders. But what happened is you get out of the 8 days of trading, we really had 3 big days, and they were all big up days, and the markets really didn't do much. So if you looked at some of the charts like Lennar, Toll Brothers, Baker Hughes, not Baker Hughes, D.H. Horton, DHI, Pulte, PHM, they've actually gapped up and then traded in pretty tight ranges most of the day. So there really wasn't too much day trading opportunity. Now, you could have eked out a couple of small gains, but when you're getting into a stock and you're risking capital, you want to make sure that the reward is greater than your risk that you're taking. So to me, it just wasn't anything substantial, so I kind of passed on that. I am still looking at the builders on any higher highs on a pullback. So let's keep an eye on that. Definitely looking at the oil services starting to look really enticing. They're starting to base while oil prices continue to get hammered, and that's because of obviously the almighty dollar and of course the de-escalation that's going on in Russia and Ukraine. I personally can't believe that oil is at these prices, but I'm starting to look for buy entries in the oil services sector, in the oil sector alone, and some of these oil stocks are looking pretty good. So let's go look at a couple of indicators. As you can see here, stocks above the 50-day moving average, they barely budged. So what we have is we have some big name stocks that are pushing the ETFs and the indexes higher, while most of the majority stocks are staying well below their 50. Now, again, I showed this to you the other day. This does have plenty of room to run to the upside. So if a lot of stocks start catching a bid, that's going to push the indexes even higher, right? So let's take a look at the bullish percent. That went on a buy signal. Let me just get that here. That went on a buy signal from the nasty sell-off that we had. So now this is back on a buy signal here, okay? We also have the McClellan oscillator. Now you have to be careful because this is the only indicator that's telling me that we might get a slight little bit of a pullback or a pause. We're coming into the sweet spot of a market rollover and or a pause. Now remember, when I say market rollover, we could actually just kind of pause sideways or chop slowly down into some sort of a bull flag pattern and then escalate higher. And that's where I think we're headed, guys. I mean, I really don't think that the markets, at least now, I think they should be ready to challenge the highs unless something serious happens again. And remember, the last 2 weeks of August, this week and next week, it's going to be extremely quiet. So you are going to have moves that are going to push to extreme levels, whether it be to the upside or to the downside, because there's no one around. The volume is very, very light. So just keep that in mind. Take a look at the bonds. I would like to buy bonds back into these areas here. This little resistance area now being support, which coincides nicely with the 20. This is where I'd start nibbling in to get long bonds again. And I do think that there's going to be a decent sell-off. We had one for 3, 4 days, and now we matched it with 8 days straight up again. So the pattern remains the same. Nothing has changed. We continue to buy dips. The markets continue to buy dips since the beginning of 2000 and the end of 2012 actually. We bought dips and we've continued to move higher in the marketplace. So to me, I think the market wants the S&P 2000. I think it's probably going to get it. So let's take a look at the dollar. The almighty dollar is up yet again, and as you can see, to me, this is also a concern of mine. But you're not going to have every asset class, correlated or incorrelated, match what your analysis is going to be. So sometimes you have to kind of push it off to the side. But it's nice to look at and say, you know what, this is up, and that's why a lot of the grains and the precious metals and, of course, crude oil have been getting battered and really no signs of life at the moment, and it continues to move higher. So we just hit this 1272 extension, and I'm going to put some upside targets here, some closer targets, and see where we go from here. Okay, I'll do that tomorrow. ES, what can you say? We broke the middle trend line. So the next, believe it or not, is to challenge the highs. And again, unless something happens, any geopolitical event happens where the markets get spooked again. Now, this could easily come back in. If we get back below this 1960, to really alleviate downside pressure, we need to get back below 1940. That's going to be the ticket. It's going to be 1940 to get back down to, I mentioned downside, but alleviate any upside pressure. We need to get back below 1940 and start making lower lows and lower highs to really continue this sell-off. But 8 days straight up, back above the averages, I would say that the sell-off is now over. And we never got the trigger to get short the market here, okay? Perfect example, I mentioned this inverted head and shoulders pattern back here, right up in this area here. This was last week, and it's coming to fruition. So it does look like that we're looking for 2,000. Here is the target line is 2,000. 127 comes in at 2006. Why not hit that? Usually it does overshoot. So this is going to be your new target to the upside here, and I think that we can get there rather quickly. Diamonds, we took out the 61.8% retracement, so there's no short here. We're probably going to look to challenge the highs here in the diamonds. And in transports, was a little subdued yesterday, but it did have a big run, as you can see, off its lows. Pretty much 8 straight days up in a row. And again, we're going to be looking to at least challenge the highs, and the next new high, or next new target line, would be the 1272 extension, and then the bigger target, the 1618. And lastly is the Qs. IWM, we have one more. We have two more. IWM is still being the weakest of the 5, but again, one of our leaders here. I think you're going to see this area here once we break through this little cluster. This will be the 50% of the big area, and the Fibonacci retracement took from here, from high to low, and projected here to give us some midline targets of 1272. So here's going to be your target. You might want to write that down. And then, of course, lastly is the Qs. We hit the 1272, and now our next target would be the 1618. And as you can see, this has held up extremely well. Where you have the diamonds, the Dow Jones met its target of the 200-day, where we not even get close to that. So this definitely held up the market, and we'll continue to move higher here. Big cap tech looking okay. I think a little bit stretched, but nonetheless, we're looking pretty good here. So let's see what happens. We have some European data that just came out now, hit the wires, and they sold the market off pretty hard here on one big candle. So we'll see. Let's see what happens the rest of the day today. Again, the theme is going to be buying dips into support, good quality stocks. Okay. All right, guys.